What's up, guys? This is Primeflex, and I'm back with another massive strategy for you guys. All right, thanks to everyone for the support, thanks for the encouragement. Thank you guys for what you've been doing, and I'm going to make this video a very special one for every one of you guys who have appreciated me for everything I've been doing so far. Those that have texted me on Telegram, on WhatsApp, and they've been appreciating my efforts and showing me profits and even losses they've made using my strategy. It is you guys that keeps making me improving my videos and my strategy approach. All right, so thank you guys for everything. Now in this video, like I said, I'm going to make it a very interesting and a very straightforward video for everyone. Now this is a very complex strategy. It is a complex strategy because we are going to be using indicators to trade price action. What is price action? Price action is simply not using indicators to trade. So we are only for price action, you are only making use of the candles, but for indicators, you are going to be making use of those tools that tend to follow the prediction of candles. So how do we do that? How do we make that possible? All right, guys. So in this video, I'll be showing you how to combine your indicators, all right, and your what price action. So if you combine your indicators and your price action, what does that give you? It gives you a very better edge in trading the market. All right, guys. So let me just show you something. So if your indicator is going to give you a 50% win rate and your price action is going to give you a 60% win rate. Now, if you combine both of them, there is a chance that the overall win rate you are going to be getting in the market is going to be greater than 50% and going to be greater than 60%. You can have at least 80% overall win rate when you combine both of them. All right, so that is what we're going to be doing in this video. This might be a series if I'm not able to fully explain what I really need to explain in this video, because it is going to be a very deep explanation for you guys. All right, so let me show you what I'm trying to say. For price action, what we are going to be focusing on is what I call chart patterns. All right, chart patterns. Now chart patterns are simply a diagram or an imagery of how market has moved. All right, so when I say a diagram, it could be a triangle. This is a triangle, right? Now chart pattern is simply price following the shape, all right, of this triangle. That is going to, so we can call this triangle a chart pattern when we see the market. So the market moved somewhat like this. Now we can say this is a triangle chart pattern, because the market represented in this orange line as followed the as mimicked, all right, it has mimicked the shape of a triangle. So we can call that a triangular chart pattern. I hope you guys are getting it. So when we say chart patterns, it is simply the chart showing us a particular diagram. Now the reason why chart patterns became something to learn in the market is because over time traders and speculators, they saw that the market kind of repeats itself in a particular diagram. So we have the market repeating itself in a rectangular diagram, we have the market repeating itself in a triangular diagram, we have the market mimicking some certain cup and handle, some certain lines and boxes. And so this has become something for every trader to always make use of, because the market will always repeat itself. All right, it is human emotions, and our emotions are always repetitive, so the market will always repeat itself. Now for this video, for today's tutorial, I'll be showing you guys how to use a certain chart pattern I call the head and shoulders. I call it the head and shoulders. So it is the head and what the shoulder. Do not mind my handwriting. I'm just trying to be as explanative as possible. All right, guys. So what is the head and shoulders? The head and shoulders is a pattern that kind of mimics what the name represents, head and shoulders. So I have a human being. This is a human being with a head, a neck, and a what? And a shoulder and a body. So this is a human being. So let me draw it. Let me draw it this way. So I have this human being, and I can call this human being prime. So this is prime. All right. So this is prime. Do not mind my drawing. So this is prime. All right, guys. Prime has a head. Prime has a head. This is the head of prime. And prime has two shoulders. He has the shoulder and he has the shoulder. So we are looking for a way that the market is going to mimic this pattern. So we can see the market mimic this pattern in this way. So the market can move like this, and then go up like this, and then go like this, like this. So the yellow lines you're seeing is the way the market has mimicked the red head and shoulders pattern of prime. And I hope you guys are getting what I'm trying to say. So let's say this is the diagrammatic representation of head and shoulders. So what do I call this place? I call this place the head. This is the head. I have the left shoulder and I have the right shoulder. Now if you can refer to the diagram of prime I drew before, you are going to see that prime has a neck, and that neck is going to be a connective line of both the left shoulder and the right shoulder, and it is going to start from here to here. So this is what I call the neck. So this is the neck right here. I hope you guys are following. So I have the head, I have the left shoulder, I have the right shoulder, and I have the neck. Now that is a diagrammatic representation of head and shoulders. Now you might begin to wonder, why have I been doing this deep explanation about head and shoulders pattern? The reason is because that is what we are going to be using in this particular video. Alright guys. Now we are trading price action, but then why do we have indicators? Like I said before, we are going to be combining our indicators, and we're going to be actually using indicators to trade heads and shoulders. Now, in a way, we might not say the market make this simple head and shoulders. This is what I call a textbook explanation or a textbook representation of heads and shoulders, where the head, the shoulders, the left shoulder and the right shoulder, and the neck are very, very easy to spot. The market is not going to show you something very easy to spot like this. All right, the market is not going to show you something very easy to spot. Now the market might decide to show you something like this. Now it is important for you to understand that this is still an head and shoulders, because you have the head, which is the peak, which is the tallest, and then you have the left shoulder and the right shoulder, and then you have the neck, which is a line that connects both the left shoulder and the right shoulder. I hope you guys are getting it. Now what form of pattern is the heads and shoulders pattern? It is what they call a reversal pattern. It is a reversal pattern. What do they mean by reversal pattern? A reversal pattern is a pattern that tends to show that the market is going to reverse in its movement. So if the market has been going up, a reversal pattern can appear. A reversal pattern can appear, and then the market is going to go down. So the pattern that has happened here is what they call a reversal pattern. So the market is going up, a reversal pattern happens, the market reverses in its movement. That is what they call a reversal pattern. Now, we are going to be using a reversal pattern to trade the market. All right. Now, how do we spot the heads and shoulders in a situation like the boom and crash? We have a boom and crash that doesn't even, that just feels like you have a big candle and then small candles, and you have a big candle and you have small candles and you have big candles. It is going to be hard to spot patterns in the 1 minute boom and crash market. So how have I been able to trade this thing? I've been using this strategy since last year, and I introduced the strategy to some of my co-traders. But then we weren't trading heads and shoulders pattern. We were trying to figure out what pattern is the best pattern to trade using this method. And we tried a lot of patterns, which I'll be telling you guys in this series. I think I'll have to turn this to a series. All right. So, um, but I think the heads and shoulders, or not even think, I found out due to my based on my deep research that the heads and shoulders is one of the most accurate when you trade with this method. Now, what is the method? We are combining indicators with price action. Now we know our price action to be heads and shoulders. Now, what indicators are we going to be using? We have to find out what indicators we are going to be combining with the heads and shoulders. What indicators would that be? That would be the what? That would be the RSI. Now, as you follow me, let me show you the settings for the RSI so I don't have to do that at the end of the video. This is going to be the settings of the RSI. We have a period that is going to be set to 10, and we are going to be applying to close. All right, the levels are going to remain blank. We don't need any levels, we don't need any lines disturbing us while we are trading with this method. Then click on done, and this is how clean your chart is going to look like. All right, guys, how do we trade the heads and shoulders in the market? Like I said, the market is not going to give you a basic head and shoulders that looks like a mountain top. It is going to come in different angles, all right, or it could come in very unorthodox diagrams. But for you as a trader, you need to have a very keen eye to spot these diagrams. All right, now let me show you an example of what I'm saying. In this method, we are going to be actually doing our price action on the RSI. So you can make this bigger. All right, you can make this bigger, and then you can decide to just this is our price action window. This is our price action window, and this is just going to be our market window. All right, guys, so this is the price action window, and this is the market window. The market window is not necessary. The only time the market window is necessary is when we are trying to take profit. Now, the price action window is more necessary because we are going to be doing all our analysis on all our markups and everything we're going to be doing on the chart on the price action window. All right, guys. So let me give you an example of a price action I'm trying to show you guys. So now I want you to first of all look at this diagram right here. Now we have the RSI come down and then come up, go down, come up, go down, come up a little, and then fall back down. What can you notice in this diagram? You are going to notice that I have the market go up, then go down. All right, goes down, then goes up again, then goes down, then goes up again. Be patient with me, guys. All right, and then it goes finally goes down again. Now you are going to notice that I have something right here. Trying to show you something. All right, let me delete this. Now you are going to notice that this could have been a heads and shoulders. Why do I say so? This is the highest peak, right? So we can call this the head. We can call this the shoulders because it is also a peak. And then we can call this the right shoulder because it is also a peak. And then we have a neck. Now you can see why I told you guys that the market is not going to give you a straightforward basic diagram of the heads and shoulders you're going to see in your textbook. So let me delete all of this, and let me delete all of this as well, so I can show you guys what I'm really talking about. All right, now you can see I have my right shoulder. I can call this my right shoulder. I have my head. I have my left shoulder, and I have my neck. Are we communicating here? I think you're actually getting what I'm trying to say. So this is what I can call a heads and shoulders, right? Now you can see the market was going up and going up and going up, and then the reversal happens and the market begins to go down. So this is a reversal pattern. This is an heads and shoulders pattern. I have the left shoulders, I have the head, I have the right shoulders, and then I just wait for the neck formation. And once I see the neck formation, I wait for a clear breakout of the neck formation, and then I take my trade. And you can see how far the market fell in the market window. I think I'm communicating here. Let me show you another example. I think this is a very clever example. So this is very even harder to spot because the peak right here is a very small peak. As you can see, a very small peak. Can I zoom in? Yes, I can. This is a very small peak, which is the left shoulder. Then I have the head, and then I have the right shoulder, and then all I'm just waiting for is the breakout of the neck. And when I see that breakout, I know the market is going to the market is going to fall, and then I'm just going to take my trade, and you can see how well the market fell. So let me see if I can give another example. So this is another example right here. I have the left shoulder. Always make sure that the head is taller than both of the shoulders. All right, I have the left shoulder, I have the head, then I have the right shoulder, and then I just wait for a breakout of the neck. Now make sure your neck formation is to the upside. Make sure the neck formation is to the upside. All right, you want to make sure the neck formation is to the upside. So you have all the patterns happening, and then you just wait for the neck formation upside. If your neck formation is this way, like this, then it is not a reversal pattern. It is not an head and shoulders. All right, so I want the neck formation to be let me delete this. So I want the neck formation to be to the upside. All right, guys. So you can just use a trend line to mark it out. And then I want to make sure I have my left shoulder. I have the head. I have the head right here, and then I have my right shoulder. And then after the breakout of the neck, I know the market is going to fall. And I hope you guys are following me. So this right here is what I call a heads and shoulders pattern. All right, guys. So I think I'll stop this video here, and I'll just leave you guys to try and look for good heads and shoulders patterns. Now this could be an head and shoulders pattern. I have the shoulder, I have the head, and I have the shoulder. But now look at the neck formation. The neck formation is to the downside. So we are going to say this is not a reversal pattern. It is not the heads and shoulders we're looking for. All right, so we need a head and shoulders that the neck formation is going to be to the upside. Now it doesn't matter how long it takes for the head formation. I can call this my neck, I can call this my head, I can call this I can call this my left shoulder, I can call this my head, and I can call this my right shoulder, and I can use this as the neck formation. So it took a whole lot of movement in this space. It took a whole lot of movement in this space for my head and shoulders to be completed. But once I can spot my head and shoulders, I know right there that this is a heads and shoulders pattern. All right, guys. So I'll be doing another insightful part 2 of this video in my next episode. So Make sure to like this video and subscribe to my channel and turn on the notification bell so you're going to get a notification when I release the part 2, and I'll be giving a very more insightful explanation about using this pattern on the RSI 10. So thank you guys for watching. PrimeFlex says bye bye.